In this episode, we're going to talk about how to protect your assets. All right. So we talk about life insurance a lot and we talk about real estate investing. Today, we're going to talk about protecting your assets. We're going to talk about the other kinds of insurance, all those fancy letters that they try to confuse you with, CI, DI, LTD, HSA, all that stuff. We're going to break down what each of these kind of things mean, what's involved, and which ones you should have. Hi, everyone. Welcome to Control and Compound with Darren Mitchell. I'm your host, and joining me today, as always, Christina Wyatt. Christina, how are you today?
Hey, Darren. I'm doing awesome. How are you doing today?
I'm good. This is one of those topics we get a lot of questions on. What about this? What about that? We get these random questions, so we thought we kind of package it all together and go through that today.
Absolutely. But before we get started, I just want to remind everyone, if you're listening on your favorite podcast platform, you're going to want to subscribe and leave that 5-star review. And if you're listening or watching on YouTube, please make sure that you like, subscribe, and hit that bell button so you always know when new content is coming out.
Okay, so we're going to dig into all these different types of insurance in this podcast. So, Christina, we're gonna start sort of talking about why you need some of these insurances. And Christina, we say it day in, day out, every single meeting we ever have with a client or a prospect, we talk about this. What is your greatest asset?
Your greatest asset is you, right? You are your greatest asset. You have the ability to make the greatest returns you are ever going to see in your life. You produce the income. You are the golden goose that lays that golden egg at the end of the day, right? So that's probably your most important asset that you need to protect out there. It's you.
Absolutely. And some of these insurance are real important, and some of them, are, again, maybe not sold the right way, and people don't understand them, and they buy maybe the wrong product. So we're going to do an overview of each kind of type of insurance, non-life insurance type of insurance today. And we're going to start the first one. We're going to start with CI. What's CI?
Yeah, so let's just actually say it versus the letters. Critical illness insurance. So critical illness insurance to me is a very important one. Like, I've seen it used more often than a lot, and it really has a very big place in protecting yourself and your family. So what critical illness insurance is you pay a monthly or an annual premium for a benefit that is paid while you are living. So this is not a death benefit. It's while you're living. If you are to be diagnosed with one of typically, the majority of the policies are around one of 25 illnesses. So think, cancer, heart attack, stroke, multiple sclerosis, those types of things. So big critical illnesses. You get diagnosed with one of those illnesses. You live for 30 days, and then the insurance company is going to send you a tax-free check for the amount of amount of benefit that you have paid for. So let's say you purchased a $100,000 critical illness policy. You've been paying this monthly premium. You get a diagnosis of cancer. You live for 30 days. They're going to send you $100,000 tax-free for that critical illness policy, which can really come in handy during a time like that. I've often referred to these as setting up your own GoFundMe account. Because at the end of the day, we see a lot of people on Facebook, you get that cancer diagnosis, you have an illness that comes about in a family, and the costs of that are huge, getting back and forth from hospitals, medical care, maybe out of country, those types of things. And you see the community coming together to, help and GoFundMe. But having one of these policies actually creates that account for yourself, because you have that in place. If something were to happen to you, you're going to have that influx of cash that you're going to be able to use for what you need. And it could even be a trip to Disney World, right? You use it for whatever you want. That money's just going into your bank account.
Yeah, I love critical illness too. Especially, we could spend every podcast just talking about the healthcare system and the waits to get into to see specialists and stuff. If you or a family member is diagnosed with cancer and they say it's going to be 18 months to get the next test or something, would you like some money to go to the States or go to a private clinic or go to wherever you want to go to access that? Or if you're terminally ill and you want one more trip around the world with the family, or the other thing, Christina, is I've seen it, and I've personally delivered critical illness checks, and it's pretty cool. Now, death delivered a lot of death claims too, and that's impactful because I see how important it is to the family and at their time of need. But for critical illness, it's really a mixed bag because sometimes it could be just a heart attack that the person is, pretty much recovered or could fully recover from, but they still get this lump sum because maybe, you're 50 years old now and all of a sudden you're working 70, 80 hours a week and you have this big heart attack and you go, maybe I want to reevaluate my life and maybe I don't want to work those hours. And all of a sudden a few $100,000 of tax-free money comes in. Well, maybe you can change your future work habits. Maybe you can start your own business. Maybe you can get into real estate, or maybe you can go get that treatment that you need that could save your life. If it came down to spending $200,000 and living or not spending $200,000 and dying, well, it'd be nice to have a check for $200,000 to make that decision a lot easier.
Absolutely. And I've seen, I've delivered checks on the other end where people have put all of their money into, keeping the lights on at the end of the day and having that check come in right around Christmas time and having a Christmas for their family because every dollar has been put into getting through this medical. So there's one side to the other, right? And it can really, it can be really impactful for families to have something like this put in place for them. As a protecting you, right? This is a protecting you, it's not a death benefit. It's there to help you. And a lot of the time, when people do get these illnesses and stuff, a lot of people, the healthcare and the advancements in healthcare is you do live, right? You have these heart attacks, they add this in, or you have cancer, they beat it, and you're good to go, which is amazing. But if you're good to go and now all of a sudden you're hit with a financial struggle, well, that's a whole nother, thing that you're battling. So this can eliminate that for you, which is great. And it's not that expensive. Like people tend to think that critical, that must be really expensive, but it's really not. Like I did the math out once for a 35-year-old male and it's less than like a Starbucks coffee a week. Like literally it can be very inexpensive for the term insurance type ones. There's other products that you can get into that have bells and whistles and extra cash and savings components. But a standard old, like just put it in place is not going to run you a lot. And it's really going to offer you some big time protection. I think, like every member of my family has a critical illness policy. Every member. I'm not walking around without one. I truly believe that they are an important part to an overall plan.
Yeah, and I think that's an important point that every family member, because, I think of, my spouse say, well, I have critical illness on my spouse. And if your spouse is diagnosed with cancer, heart attack, some bad medical condition, do you want to be going to work every day while your wife's going to the appointments or your husband's going to the appointments? No, I want to be there. So even if there's a non-working spouse, if it's a stay-at-home husband or whatever, and all of a sudden that person gets diagnosed with something, well, typically in life insurance, we're insuring the breadwinner because we're trying to replace that income. But for critical illness, you really should be looking at it at both spouses and the kids as well, but both spouses, because if my wife gets sick, I don't want to be showing up to work every day. I want to know I've got enough money that I can basically take months off or take the year off or take an extended period off or make every appointment. And, where are you going to want to be if your spouse is sick? You're going to want to be at the office or are you going to want to be with your spouse? So real important to cover everyone in the family, especially the adults.
Yeah, absolutely. So that's our critical illness. And it kind of goes into our disability because I find a lot of people confuse the two. They think that disability and critical illness are the same thing because, if you're off work because of cancer, then that's disability. But no, disability insurance, critical illness insurance, two very different products for different needs, right?
Yeah, absolutely. Critical illness, lump sum. You could technically not be disabled and still get a check. You could have a heart attack, miss a week of work, and if qualified at the right level, you're going to get paid. Disability, whole different thing. Disability is not giving you a lump sum. The idea of a disability contract is to replace your income, and that's really the distinction. So they're completely different products. So on disability, we have personal disability and then a group disability that people have through their employer if they have a group insurance plan. Let's talk about disability insurance and individual disability insurance. We've talked about some podcasts about some companies getting out of this. We think it's in part because of the massive increase in mental health related claims. So the insurance companies are seeing the claims go up. But explain just a personal disability product. How would that work? When would the rates go up? How does that work, Christina?
So, quick overview on personal disability insurance. So, you purchase a policy for yourself, and it is locked in. Typically, when we're setting up a very, full coverage policy, comprehensive policy, we're going to have coverage until age 65. So, your typical retirement age, right? So, you put the policy in place now. If you were to become disabled through illness or injury, that's another key point, right? So, it doesn't have to be an illness that is the reason for the disabled, but you're deemed disabled. Typically, we put a 90-day wait on those, but there are ways you can do 30 days, 60 days. There's ways to set it up, but typically around a 90-day wait. And then what's going to happen is that there's a monthly benefit, tax-free monthly check that is going to come to you or deposited into your bank account to replace your income. So that's your monthly income that they're going to be replacing. So what you would have been earning, were you still in the office or you were still working? Now, we do have a full podcast on disability to go into some of those definitions. We did a full one on it. Click the link below if you want to check that out. But that's kind of the overview in how that works. It's a monthly benefit that you're going to be getting paid with a disability policy, not that lump sum like critical illness.
Yeah, and then on the individual policies, we have all kinds of more options that you don't have on the group insurance. Your rate's never going to go up. You can have what else? What else are the key differences? Oh, definitions is a huge one.
Yeah.
Definition of disability, and again, we talk in the disability podcast, but briefly, there tends to be in any occupation. If you can't perform any occupation, you're reasonably qualified through education, skill, and experience. So if you're a surgeon and you can be a regular family doctor, well, maybe you wouldn't qualify for an ENEOC. But so that's why for the professionals, we really want that own occupation definition that says if you can't perform your own occupation. So if you're a heart surgeon and all of a sudden, you get shakes in your hands and you can't perform surgery, you can't perform your own occupation, you're going to be paid, as opposed to in any occupation, the insurance companies may come back and say, well, you could still do this job or that job. So the better the definition, the more likely you are to actually get the benefit. And then the group insurance, again, we won't go through too much, but group insurance tends to be through work. Typical is, roughly 50% to 2/3 of your salary, typically on a tax-free basis if you're paying the premiums. If your employer's paying, it's taxable. But those are yearly renewable. So every year your employer gets a renewal and those rates can go up. They're not portable. So if you leave that employer and you go to a new employer and they don't have a disability, well, now you got to go buy your own. Well, maybe you're no longer insurable. So starting a disability plan, especially if you're an entrepreneur or planning to be an entrepreneur or a full-time real estate investor, in a perfect world, you want to get that disability plan set up while you still have a full-time job and you have an income track record to go to with the insurance company, as opposed to you wait till you start your new business and then you go, okay, I've got an income of zero. How much of my income are you going to reinsure? Well, you don't have an income, so.
Yeah, you want to get them put in place beforehand. And when you think of it, like if you think about it now, your annual income between now and age 65, if that's when you're planning to retire, that is what you are protecting. That is a huge amount, right? This is bigger than usually death benefits that are put in place, critical illness, anything. And I find it doesn't get talked about enough, the disability insurance. It's a very important part of the overall protecting your assets.
And if we go back to that, you are the golden goose, you are the moneymaker. The old disability analogy is, well, you've got a machine in your basement and it's pumping out $100,000 a year every single year. Well, first of all, you want to make sure you maintain that machine. But secondly, what if you could ensure that you're only going to get $97,000 a year from that machine, but it's guaranteed to work for the next 25 years versus I can take $100,000 on my money-making machine, but it could end tomorrow. The machine could break down. Well, that's really what disability is. Your $100,000 income, in my example, if you become disabled, that income goes to zero versus if you, paid a few $1,000s, depending upon your age, and said, great, I'm going to only take 95 or 97 grand a year. But then if I become disabled, that income would continue. Which machine would you choose? And for a lot of people that say, well, I'll take a little bit less knowing it's going to be there for the next 20, 30, 40 years, as opposed to rolling the dice, hoping the machine doesn't break down.
Thanks for listening so far. If you're watching on YouTube, make sure you like, subscribe, and hit that bell button so you always know when new content is coming out. If you're listening on your favorite podcast platform, please leave a 5-star rating and leave a review and subscribe. And if you are interested in learning more, please visit our website at controlandcompound.com to sign up for a free education session with one of our wealth coaches.
Exactly. I think that's our disability side. I have another one that I don't think is quite as popular. It's not talked about very often, but long-term care insurance. I don't know if people have even heard of that one. And it's not talked about a lot, right?
Yeah,
But an
long-term care.
LTD.
Well, let's do AD&E first. Let's do accidental death and dismemberment, and then we'll jump into long-term care.
Okay.
So AD&D, or accidental death and dismemberment. What's that? Well, everyone thinks you die in an accident, you get paid. And that's it. But what about the dismemberment? And we're not going to go through the chart, but there's actually a dismemberment chart and an accident. So let's say you had a $100,000 accidental death and dismemberment. If you died in an accident, they're going to pay the $100,000. If you lose an arm, they're going to pay X percent of that 100,000. You lose an arm and a leg, they'll pay a higher much. If you lose an ear and a finger, they're going to pay, 16%. But if you lose this and that, so there is a dismemberment chart. I really don't see that get paid a lot. The accidental part, great, you die in an accident. And typically, if you have group insurance at work, you'll be covered for like a flat amount, or usually 1 or 2 times salary for life insurance and AD&D. That just means if you die in an accident, it's double. And we get a lot of people that, hey, I saw this AD&D. I can buy like 500,000 of AD&D for like, $3 a month or whatever it is. Let's dig into that, Christina. How likely is an accidental death likely to occur?
So why I didn't bring it up is I don't really like this stuff. I don't like this stuff very much. This AD&D, it gives you a false sense of having coverage. Like literally people are like, well, I have this AD&D policy I got for peanuts and I'm covered. It's like the odds of you dying in an accident are very slim. It doesn't happen. It does happen. Don't get me wrong. And, it's not bad if it's free on your policy. Well, why wouldn't you take it in your group plan? But you think that you are covered by owning just an AD&D policy. It's not that smart, I don't think. It's just not. It's the odds of it happening are slim, right? And you think that you're getting a deal because you're not getting that much in return is why you're getting a deal, right? And that's why it's so cheap, because it's the odds of it getting paid are slim, and the house is going to win in this case. And Darren, you've got a good analogy for that.
Yeah, well, people talk all the time like, well, why is AD&D so cheap, or my term 10 so cheap, and disability so expensive and stuff? Well, the insurance companies don't just pick random numbers for the premium costs for these things. The premiums are totally a reflection of the likelihood of claim or the incidence of claims. So, let's say just use $100,000 a year, and you go, okay, for AD&D, I can get it for like 5 cents, but my term life insurance costs $10. Well, yeah, there's a greater chance that you're going to die versus the chance that you will only die in an accident. So the likelihood. Disability, well, it's going to be a lot more than $10 a month. Why is disability so expensive? Because there's a really, really, really good chance that you'll become disabled prior to age 65. I think 1 in 3 people become disabled. So there's a really good chance that you're going to become disabled. So there's a really good chance the insurance company is going to have to pay. So for disability, it's going to be more expensive. For the cheap term insurance, the likelihood of you dying in the next 10 years isn't that great. The likelihood of you dying in an accident, it's a little greater than winning the lottery, but not much. Don't be misled by premiums. You get what you pay for. You're buying the premiums reflect the likelihood of actually getting a benefit from it.
Yeah, that's a great way to kind of to go through it, right? It just puts it in perspective when people are like, oh, I can't pay that much, but the likelihood of it, the reason it is because there's a true benefit there for you at the end of the day.
Yeah, I mean, AD&D, you could also buy meteor insurance, that if a meteor hits the earth, you're going to get $1 million. Great. If you want to spend a few dollars and buy something like that, great. And again, AD&D is not quite that extreme, but it's along the same line of the likelihood of it happening is not that great.
Yeah.
Now we can jump into long-term care.
Got it. Okay, so the long-term care, that what is this coverage? What we don't hear, and a lot of people don't use it. They call it LTC too, but it does offer a different type of benefit outside of all of these. So what a long-term care coverage does is it is for kind of after you've gone through the disability insurance, maybe after you've gone through the critical illness insurance, and now there's a likelihood that you could end up in a long-term care facility. We can actually purchase a policy that will pay for that long-term care facility for you by paying these premiums. So you pay a monthly or annual amount, just like any other insurance product. And if you were to be, admitted to a long-term care facility, they're going to kick in that amount that you have purchased. So it might not cover the full amount, but it's whatever you would have purchased. They're going to provide that amount to pay for that long-term care facility for you. So it's unique for sure. It's definitely people are using it, but it's longer term. It's after you've used that disability, that critical illness insurance period.
Yeah, and the product's been around for a number of years in Canada, and it just, to be honest, it doesn't sell. The premiums are only guaranteed for a fixed period of time. Then the premiums keep going up. It's a very high cost. We do have some people like. Oftentimes, too, single people tend not to buy a lot of life insurance, but single people are very interested in critical illness because, they want money if they become sick, and they're also interested in that long-term care of they want to make sure there's money to look after them if they're sick because they don't have family members perhaps to help take care of them. But we don't really see it that sold that much. Just the premiums aren't guaranteed, and the premiums are quite high. Anything else on long-term care, Christina?
Some of the insurance companies do have a long-term care component type thing built into their critical illness policies now because we're seeing people not using the long-term care and purchasing those standalone policies. I know Manulife, for example, does have a long-term care type coverage built in. So if you didn't use your critical illness insurance coverage, they'll allow you to use it towards long-term care facility payments later on. And that's it's kind of built into the coverage, which I kind of like that option because it's in there for you already with the plan that you have for the critical illness.
Yeah, that's a great point. Yeah, no, I have that same product myself, and that was one of the reasons I bought it. I was like, well, I could buy from different carriers, but this one, it also has that long-term care feature down the road, and having a family member that was in long-term care, I think at one point my dad's long-term care was about $100 a day. So it's not inexpensive. Now, government pays some, and then depending upon your income and back and forth and stuff, but, it's a significant cost. So, there's value in it. But the price, we just really don't see it sold that much. Okay, Christina, what's next?
Now we're going to talk about health plans and healthcare spending accounts for individuals.
Love healthcare spending accounts. If you are an incorporated business owner, you need a health spending account. No, full stop. End of story. These are free. You only pay for them when you use them, and it's one of the most tax efficient ways to get money out of your corporation. Simple example. CRA determines reimbursement for health and dental claims are tax free. So if you work for a big company and you have a health plan and you get a $100 prescription and that gets paid, well, that $100 is tax free to you. Health spending account works the same way, except it covers stuff that isn't normally covered under your health or dental plan. So say braces for the kids. My example for the braces for the kids, my kids were good enough to get braces the same year. So it was a little over 10 grand. Well, for me to pay that $10,000 as a business owner, I would have to take $20,000 of company money, pay it out to myself, net $10,000, and use that $10,000 to go pay for the kids' braces. With a healthcare spending account, I set it up for free. Then that expense came up, and I said, great. You literally take a picture. I didn't do it one lump sum, but you take a picture of the receipt. In my example, $10,000. I send it off on my app, on my healthcare spending app. It goes to the company. They deduct $11,000 from my corporation, $10,000 plus a 10% fee, and they reimburse me $10,000 tax free. So in that example, it cost me $11,000 of corporate money to pay for those braces instead of $20,000 of corporate money. And the same thing works if you have a $50, $100 claim. I know my kids go to the dentist and they come back and it's like, $120 and 70 was paid, so we have to pay 50. I can actually just take a picture of that and send that out. And now I've got my corporation paying for it for a 10% fee. I'm getting the $50 tax free. There's no reason why every incorporated business owner wouldn't set that up. And the company we use, it's beautiful. They just got a little picture of an app. And for sign up, how long does it take for someone to sign up for an HSA, Christina?
10 minutes, if
10
that.
minutes, yeah.
If that. You have all the information you need. Yeah, maybe 2. Yeah, well, you got to download the app, okay? So you got to download the app. You got to set it, like, literally give the information over the phone, download the app, and you're good to go. It's a no-brainer.
Talk to someone in our office. We need a company check. We need a personal check, and your family's information. That's pretty much it. And download the app. And again, employers often offer this too, right? You can have an employer where everyone gets $500 a month healthcare, or $500 a year health spending account that they can use for anything that's not covered under the regular health plan. Now, CRA does have a list. You can't go use it for trips to Vegas. It's got to be health related. But I've seen it used for like people going down to the States for treatment. They want coverage there. I've seen it just all over the place. We Control and Compound, we have a healthcare spending account for staff, so we're big believers in it. And you can discriminate within a class of employees in that. So maybe the senior executives might have 10 grand a year, and the junior executives would have 5 grand a year, and all other employees would have $1,000 a year. So you're allowed to distinguish by class in that. But sometimes it starts out with just the owner. Now again, you've got to. There's way you got to set it up properly. We're not going to get into today, but really tax effective strategy to get money out of your corp to reimburse those health and dental claims that aren't covered.
Yeah, absolutely. Again, it's a no-brainer. If you are an incorporated business owner, it needs to be done. There's no reason why it shouldn't be.
Yeah, and I mentioned health and dental, Christina. I'll just briefly talk about that, and then like health and dental for your group insurance. I believe insurance should be for catastrophic occurrences, right? No one ever lost their house over a filling, right? I want to make sure in my health plan that those catastrophic things that tend to be out of Canada travel, you have an accident, you have a heart attack in Florida, a couple $100,000, you have whatever, very expensive. And then those high medical costs, your cancer drugs, $90,000 a year. MS drugs, $35,000 a year. Parkinson's drugs, $30,000 a year. Paying those out of pocket are huge. So you got to make sure you have that coverage. If you have a group insurance plan, but what about individuals that don't have a group insurance plan, Christina? What are the options for them?
Yeah, so if you don't have a group coverage plan for your health and dental benefits, you can purchase them individually, right? So you can, a regular person can purchase their own plan for themselves or their family. Business owners tend to think that you need to have a group plan and have all of your employees covered. Maybe if a small business owner doesn't want to get a whole group plan right now, just starting out, you can get a plan for yourself, just as for yourself and your family. Still a business expense, right? So these health plans for business owners are always business expenses. And with a lot of the plans, you can pick and choose the coverage that you want. So you want, health benefits that cover massage therapy, chiropractor, those types of things included. Prescriptions. Some people try to save a buck on not having their prescriptions because they don't have a prescription now. Do not think in that way. When you purchase insurance, it's for future events that are happening. Because then I talk to those people a year later and they're on a prescription and they're like, well, why isn't the insurance company going to cover my prescription that I'm already on? Because they don't cover pre-existing conditions. You want to get these things in place while you're healthy. That is very important to get them in place while you're healthy. But you can pick and choose, like I want 70% coverage versus 80%, those types of things to get your premiums in line with what you want to pay. And then a lot of the time, the dental can be added at an extra amount. To be fair, like the dental is typically one of the more expensive portions of the coverage. And like you said, no one's ever, lost their home over a filling or a root canal, right? So I don't feel that the dental is as important as those that prescription coverage, right? Because the dental, you can actually, if you're a business owner, put it through your healthcare spending account too, right?
Exactly. Yeah.
And what I tell people do is do the math on how much you're spending on dental each year, and then go and see if the premium's going to be the same amount, or is it more, is it less, and kind of do the math out on it. Does it make sense to be paying for that coverage? So dental can be an add-on. Well, that prescription coverage and that health typically has the travel insurance component that you're talking about. That's where you get your travel. That health and that travel is, or sorry, the prescriptions and the travel are huge. That is the insurance component. That is what you want covered. That's what's protecting your asset, right? Because that's what's gonna cover those 90% or those $90,000 cancer drugs and stuff like that. That's where that's gonna kick in for you. So I don't think anybody should be walking around without a health plan. I really don't. You need that prescription coverage because that could be catastrophic.
Yeah, the misconception is we have free healthcare in Canada, and the reality is we don't. Drugs are not included.
Yep.
Okay, and drugs are probably the most expensive component oftentimes. So you've got to have a drug plan, and on the individual drug plan, now depending upon which province you live in, it's different by every province. If you're able to get a unlimited drug plan, that is the golden rule. You want to make sure unlimited drugs, because a lot of plans, you save a few bucks and it's like, $2,000 a year for drugs. We only use like $500 a year. That'll be fine. And then all of a sudden, 2 years later, there's a diagnosis, and now the drugs are 20, 30, 50, $100,000 a year. So you want to make sure on an individual plan that you can get unlimited drugs if available in your province. And then the last thing on the individual plan, you mentioned not covering pre-existing conditions. It's not as easy as a group insurance plan to sign up for. Typically in a group plan, especially if you're with an employer that's larger, there's no medical evidence. You sign up, you're in. For an individual plan, you're going to have to show medical evidence, and they're going to exclude you or deny you depending upon your existing medications and health. So you want to make sure you get that individual Blue Cross or individual insurance, health insurance, while you're healthy, and while your family's healthy, because look left and look right in a room, and chances are one of those people have a serious health condition in their family that's costing them a lot of drugs, a lot of drug costs, and you want to make sure you protect yourself in that.
Absolutely. Yeah. So I think those plans are very important, something that you want to look into if you don't have one now.
Okay, I got one. We got two left, but I want to talk about one, home and auto insurance. And before anyone calls us, we don't do home and auto insurance. We sell the other products. We do not do any home and auto, so we are not home and auto experts. But one of the things I believe is I'm a big believer in investing in myself, so I attend a lot of conferences, a lot of education sessions. And one of the things I learned years ago at a conference, and I really it stuck with me, is when it comes to home and auto, typically people have low deductibles because it sounds great, right? Oh, I only have to pay $500 if something happens. Well, speaking of someone that had a small little, that little pipe that goes from your sink to your fridge that makes ice, I had mine come undone one day, and it was May long weekend. We had like 16 people at the house, outdoor barbecue, and my wife's yelling, "Darren, get up here." I'm like, "Just a minute, I'm telling a good story." And all of a sudden I looked to see the look on her face, and I was like, our entire floor was covered with water from that one little thing just came unattached. It was about a $60,000 claim. My insurance doubled. My home insurance doubled, and it doubled for 5 years. It was a lot of extra money. So, I would never submit a claim. The only claim I've ever had, I would never submit a claim under a couple $1,000s, because I know what the other implications are. So if you're not going to submit a claim that low because it'll increase your rates, why would you have a low deductible? So one of the strategies I use is typically a home and auto are going to have most often $1 million liability. So if you run over someone in your car and the family sues you, or that person sues you, you're going to have coverage up to $1 million. Well, to be frank, that's just not enough liability coverage, because if you run over a guy making $400,000 a year and he's got 20 years of work left, well, what's $400,000 times 20? That's $8 million plus cost of living increases. You're getting sued for a lot more than $1 million. So what I did with my home and auto is I increased my deductibles to $1,000, and that saved me about $450 a year. Okay, it wasn't a huge savings, but it saved me some money. And I took that and I bought what's called an umbrella liability insurance, or umbrella insurance. And that covers my home, my auto, my boat. It covers everything that if I get sued, now I have an extra $5 million of liability. So I'd have $1 million in my home and auto, and then an additional $5 million in my umbrella insurance. So if I have a wealthy person over my house and they drown in the pool, well, great. I've got that liability coverage more than the $1 million. To me, that's covering the catastrophic, and that's more important than whether I have a $500 deductible or a $1,000 deductible. So umbrella insurance, again, we don't sell it. Talk to your home and auto broker, but I'm a big believer in umbrella insurance, and especially as that net worth increases for individuals. Well, you have more assets. You want to protect what you have. It's not return on your money, it's return of your money. So you want to make sure you keep what you have. So that's umbrella insurance. And then we get the last one, Christina. This was your idea. Let's dig into it. I'm just laughing already. I like it, but I'm thinking of my childhood.
We don't need to dig in it too much, but in the last year, I became a pet owner. I got my first little dog, Mackie, my dog Mac. I just love that little guy. And something that hasn't been around, I don't think it's been around very long at all, but I actually have pet insurance now. So not something we offer again, but I like it, and it gives me a peace of mind because these days, with vet bills and stuff like that, you can get, if something happens to your, pet, that vet bill can be huge. Like there's very large vet bills now that I have heard of, $10,000-$15,000 in vet bills. Again, when I got mine, I did use the same strategy where it's like catastrophic. I have the highest deductible, so I'm not paying very much per month. So it's not covering the little things that he might need, but like it doesn't cover his needles and stuff like that. But if the worst were to happen, I don't have to decide between a $10,000 bill and my dog. And I certainly don't want to have to decide that in front of my son, who is his best friend, if I'm going to pay $10,000 or I'm going to, with this coverage. So it's just a neat coverage that's out there if people do have pets. Something I did find out when putting it in place, though, is that you got to get it when they're puppies, or kittens or whatever it is, you know what I mean? But you got to get it when they're younger, when they're healthy, just like how we get our insurance. You got to get it when the dog's healthy, because if they have a pre-existing condition, they're not going to cover that dog. And it can actually get pretty expensive as the dog gets older. I found out because I had a friend that went back to check for it after I said I had it. And they said it was pretty expensive. Didn't make sense for them. But if you get it, like I think we had just gotten the dog. He was only a couple months old and we put it in place, and it's not a ton. And it does give me a pretty darn good peace of mind that, heaven forbid, something happened, I wouldn't have to break my son's heart or I wouldn't break my own heart. You know what I mean? I'd pay that, I want to keep my dog here, right? I love him.
Yeah. No, the reason I'm laughing is Christina and I were talking before we started recording, and I'm like, I can't imagine back in the 80s growing up, going to my dad going, hey, Dad, Topsy's going to need a $10,000 surgery. We got to go out of province for a few days. Is that okay? My dad would have not have dropped 10 grand on a pet, but people do it every day today. So I'm not saying I love animals. So pet insurance, if that's something you're interested in. I like your idea, Christina, of the high deductible, and people love their pets and cover those catastrophic things. All right, so that's a review of how to cover your assets. CIDI, LTD, long-term care, HSA, individual plan, all great stuff. We talked about the umbrella and the pet insurance stuff. Good stuff, maybe for some. That's it. Nice recap, Christina. Thanks for watching. Thanks for listening. Thanks for listening to this podcast. If you're listening on YouTube, please like, subscribe, and hit that bell button. If you're listening on your favorite podcast platform, please leave us a 5-star review and subscribe. And if you want more information, check out our website, controllandcompound.com, and you can sign up for an education session with one of our wealth coaches.